Good evening. Today's February 23rd. It was a crazy day in the markets. The market sold off today after they opened and tested 3,800 level, but this was just an amazing deception as we have rallied 90 points since the low and closed around unchanged, amazingly. And at the low, we were less than 4% sell off from the all time highs. So even though it seemed dramatic, it wasn't really that bad. NASDAQ closed down 65 points after being down 3.5%, or over 8% since the all time high. The market sell off was allegedly partly caused by the de-risking in the crypto markets. Bitcoin traded as low as 45,000 after being as high as 58 just 2 days ago. There was over 22% correction. Ethereum had 30% sell-off after getting down under 1,400 after being around 2,000 again just 2 days ago. And we talked about MicroStrategy, one of those companies that was the first one to buy Bitcoin. A few days ago, they have planned to issue debt to buy even more Bitcoin. So it didn't really work out for them as well. Their stock crashed 21% today and down 50% since the top. Tesla also tried to get onto the Bitcoin train and didn't work out for them as well. Today, it sold off yet another 8%, but it was down only 2% at the end of the day as it recovered together with the market. So buying Bitcoin wasn't really good for their stock prices, but that doesn't stop companies. And today, Square announced that they're buying Bitcoin, and the stock was down after hours. And they said that they're buying Bitcoin to enable economic empowerment, whatever that means. Anyway, the market recovered today as Powell testified that the policy will be accommodative for many years to come. So easy money is here to stay. He doesn't care if we see inflation either, because he said that he expects inflation to be volatile over the next year or so. Apparently, after following periods when inflation has been running below 2%, it is appropriate monetary policy to have inflation above 2% for some time. And he said that he's going to be committed to using a full range of tools to support the economy and to help its recovery from the difficult period. So basically, inflation is going to be running hot, and so will be the economy. And also, interestingly enough, Powell said that he thinks that there is a link between Fed liquidity and asset prices, but no one can really identify an asset bubble. But apparently, Matt Taibbi just did. He had an interesting article about SPAC today, special purpose acquisition companies. They made it into mainstream as Taibbi is writing about it now. And he said that the mania has reached once unimaginable heights. And in 2021 already, 160 SPACs have raised over 50 billion, nearly matching last year's record of 83. Apparently, an increasingly common element of SPAC issuance is just a name of the celebrity backing it and announcing it. So they're planning to raise a large sum of money for basically something. They just don't know it yet. So it's kind of amazing that they're raising money without any concrete business plan or some, as Taibbi calls it, irritating disclosures. And the best woke news for the day was that the chief of the Cherokee Nation wants Jeep to change its name and to stop using its tribal name on its vehicles. He said that, "I'm sure it comes from a place that is well intended, but it doesn't honor us by having our name plastered on the side of the car." That's the world we live in. Victor, what do you make of today's sell-off and recovery?
There's a part of Gestalt psychology from the 1900s where they used to make experiments based upon the shock not an electrical shock, but the stunning revelation to the subject. One of the classic experiments, which is too woke to try these days, is to put a frog in some very hot water. If you do so, supposedly the frog will jump out. But if you put the frog in some lukewarm water and you gradually heat it, the frog will stay. I've wanted to carry that experiment out for about 30 years, but somehow my siblings are against it. But for sure, we had a fantastic disruptive day today. Right out of the box, the market had flirted with 3,900 overnight. And then around midnight, out of the clear blue sky, it dropped 25 points. And then at 4 o'clock, 4 a.m. Eastern Time, it dropped another 25 points. So it was back down to 38.50 at the open. And sure enough, it dropped another 50 points from that. So we had some really disruptive, scary news. And you had to be strong to withstand it. And it was very tempting on the way back up to settle for a loss that was acceptable, but wasn't dramatic. Anyway, market went back to 38.50 quite a few times to the Soji level. Soji level was definitely in play all day today. And the key to it was the Nikkei, whether the Nikkei was going to maintain its bullishness, whether it was going to stay above 30,000. It started around 32,000, went down to 28,000, then gave everybody hope by moving up to 31,000 and closed, sure enough, at the constructor level of 30,000. So we had moves today that probably covered as much as a normal full year's move. The within day moves were about as opportunistic as the total moves for a year. There was about a 10% from 3% down and 3% up and another few percent to the middle. The market closed at 38.75.25, which is exactly where it closed at yesterday. So it was a perfect day. It scared out all the week, and it ended unchanged. And Irving Riddell, who was a psychology major and also was the greatest trader, hardly ever had a losing day. He was the chairman of the COMEX. And then he always pointed out if the market wants to go up, it will scare you by having a very disruptive move on the bottom. If it wants to keep you in, will have a very slight move, sort of part of the Gestalt psychology experiment. Now, everything that happens is in the markets also happens in nature. I've said time and time again, the best thing to do is for our listeners to get out a good book on ecology. I like the Princeton Guide to Ecology. I could spend a year listening to it. But if you just read the chapter on predation and all the methods that the predators have to capture their prey and the methods that the prey have to avoid it. Today was a good example of the pufferfish, something very common in nature that we've discussed before. It's the prey deciding whether they want to pretend that they're dead or they want to pretend that they're a lethal, very aggressive animal themselves. There's a picture of the puffer puffing itself out to avoid capture. How about the rattlesnake? Do we have that? The rattlesnake not only coils, gives you a little warning with a rattle. And how about the anteater? These are just three examples of, we've had a lot of discussion in the last few days about whether buying the best stocks outperforms, and also whether buying the companies with the highest return on capital is better than whether buying growth stocks is better than buying value stocks. And I have a chart here which I'll put up on Daily Spec, comparing the annual returns of the spiders to the NASDAQ, the QQQ. Since 2003, the NASDAQ has been clearly superior to the S&P. In 2003, NASDAQ was up 40% versus 20% for the spiders. Now in 2009, 2008, there was a crack. They both went down about 40%. By the next year, 2009, the NASDAQ was up 45% and spiders were up 20%. And each year since then, the NASDAQ has been superior. In 2017, NASDAQ was up about 40%, S&P about 20%. In 2019, again, there have been quite a few 40% gains in NASDAQ. 2020, 2019, 2017, 13, 2009. So the NASDAQ has been clearly better. So what else did we have today? We had a lot of cancel culture, which was very good for the market. There were letters written to the Senate that everybody should be more woke. Facebook canceled another MAGA, took down a post from 3 years ago. We have to be very careful that people realize that we follow the mantra, the more woke it is, the better it is for the market. Playing sports, you run into a lot of examples like this where there's some horrible, someone comes in and plays the big game and he runs you off the court, but usually that ends up with a slow decay. And the person who came up with the disruption, at the beginning, turns out to lose a lot of times. The team that comes out with a unbeaten record in the beginning of the year ends up, it's part of the regression effect that the batters with above 300 average in the first half of the season decline about 20 points in the last half. The batters with below 300 in the first half of the season end up in the second half by increasing the averages by 20 points. We had a triumvirate of wokeness. We had the idiot savant Jay Gardner, who has no training whatsoever in monetary theory, saying that he would maintain low interest rates. Janet Yellen said they'll do whatever they can to stimulate the economy, try to derive full employment. The bonds were again at a new 8-month low. All things considered, they ended at 162.5. Pretty good. What else do you see today?
Well, they want full employment. How about they just open up the economy to start with? That may help employment, but they keep it closed. So restaurants at 25% capacity and movie theaters 25% capacity, that kind of puts a damper on full employment. Schools, of course, working from home, business lunches, etc., etc. It's I don't know how they're planning to create jobs if they keep the economy closed.
Well, I think we have to be careful to decry what the Janet Yellens and the Chance Gardners are trying to do. They know what they're doing. They're sort of, they have the weather gauge. They're with the what the market likes. The technology stocks do much better in a period where there's stimulus like this, and let's not give them short shrift. They know what they're doing, and I think it's very wrong to approach the market from the standpoint like what's in the long-term good. Joining the climate accord and going back, begging Iran maybe give them another $6 billion in cash. They have the weather gauge, and we should sail along briskly. We threatened to break 3,900 a few times. It's only a question of time until we do it. There's a lot of stops there, a lot of weak people who holding on to their shorts if they can. I mean, how can you hold on to shorts after the market's been up 60% and NASDAQ's been up 70% since the middle of March, and we're still up about 3% for the year. Anyway, we've gone 6 days now without a 20-day high. That's very bullish. Has been since 2011. The duration until the next 20-day high is about 9 to 10 days, and the average move by the time we get the 20-day high is about 20%, about 12%. So everything is good. We're very woke. Biden knows what he's doing, and we shall not fight him.
Indeed.
In the stock market, anyway.
Certainly not the stock market.
My prediction is by the end of the week, we'll break through 3,900 again, and the Nikkei will refuse to buckle below 30,000. They never surrender in Japan.
And do you think bonds are due for bounce?
It's a fight between liquidity and the inflation that we definitely will have